What we see today is a very impressive reaction. We see the SPY and the QQQ breaking through important resistance points, reacting just above their long-term support levels. Not to mention several other stocks like Nvidia, AMD making bottom signals as well. So we will talk about all this and more in this video. Remember, my dear friends, everything said here is a reading based on technical and statistical analysis, without guesswork or bias, without gut feelings or opinions. Here we work with fact-based technical evidence to design our strategies. If that interests you, welcome to the Finance Hydra channel. My name is Nathan, and here we study the market every single day together, every single day, starting with the SPY ETF, which is making a solid, incredible bullish reaction. We are finally breaking the 21-day EMA, the exponential moving average on the daily chart again, making a very nice breakout of the previous resistance area. This yellow line over here, this yellow area, which was a previous resistance level on October last year, and it was a previous support level multiple times here again, here multiple times as well. So this key point was a major support level and a previous resistance level. Another example of how the principle of polarity in technical analysis works. Previous top level acting as support level. Right now, we are breaking this key point again, breaking the 21-day EMA. So, alright, whoa, what's more? We are making this reaction right above the 576 after closing this open gap over here. Remember, gaps work as magnets for the price when we see a reversal, and right now this gap is acting as a crystal clear support level. On the weekly chart, we see a very good reaction, very good one, right above the 21 weekly moving average, right above this purple trend line as well. A crystal clear double support area for the SPY. What we see today is, in fact, a piercing line candlestick pattern, which is a quite reliable bullish reversal candle structure, which actually reverses, I believe, more than 70% of the time, according to Thomas Bukowski's studies. Now, what's the problem? The problem is that the week isn't over. Okay, so the weekly candle didn't close like this. Today is Wednesday, all right? So as far as I know, we still could drop. We could see another drop, frustrating, rejecting the idea of a bottom signal on the weekly chart. However, I do agree that so far this reaction looks quite promising. We may see another resistance level over here made by a purple trend line connecting the previous top levels, but so far there is not a single bearish reaction suggesting that SPY could materialize a top signal over here. If tomorrow or maybe Friday we see another very ugly bearish candlestick pattern closing below the 21-day EMA, closing below today's low, alright, maybe we should be careful over here because this could be a particularly dangerous top signal suggesting more correction ahead. But so far, we see many technical evidence on the daily and weekly chart reinforcing the bullish momentum. Okay, so yes, we still have a few resistance levels to truly break. We still have the $600 resistance level, which is a psychological resistance level for us. And of course, there's also the trend line I just draw to you guys over here, but still, so far, we are looking quite good. Meanwhile, we see the QQQ making another bullish reaction, breaking the 21-day EMA on the weekly chart. We are reacting above first the 21-day EMA, second the $500, and third the 503, the previous top level from July last year, which is acting as a support level for us right now, this week in 2025. So this key point is a quite meaningful and important support level for the QQQ. Therefore, if we were about to see another bullish rally on SPY, QQQ now is the perfect time to do so because we are above critical support levels and we are reacting. Yes, we are reacting. Of course, if you ask me, the QQQ deserves a better breakout of this moving average on the daily chart, but still the QQQ lacks bearish technical evidence over here. We do not see any top signal yet. We don't see any meaningful bearish candle or chart structure yet. Therefore, all these technical evidence, they reinforce the bullish thesis on both SPY and QQQ. Therefore, our stocks are supposed to benefit from this movement, like Nvidia, which is reacting nicely. It is making a quite nice bullish reaction above the 130s. The previous support level, 1, 2, 3, 4 times, 5 times, 6 times over here. Now, which was a previous top level as well, multiple times over here in August last year, and again in October last year as well. Therefore, the 130s seems to be a very symbolic price level for Nvidia. Now we are reacting again above this key point. If you ask me, Nvidia is indeed materializing another bottom signal while we are above a support level, while we are still inside a sideways congestion, because as I told you guys, as I have been telling you guys here in this channel, Nvidia, to me, look at this, from my point of view, is just moving erratically sideways inside this medium-term congestion between the 130 support level and the 150s resistance area. All right, so we are now making a crystal clear bottom signal. To me, it is on the verge of triggering a buy signal, and this is a very promising buy signal because, again, guys, if you want to buy anything, all right, maybe I'm wrong. Maybe I could be wrong in this, but remember, if you buy near a support level, the risk-reward ratio is optimized. If you are wrong, all right, you will lose money, but your loss is not going to be that big. You will lose little. If you are right, well, we have plenty of upside left for us, at least to the 150s again. Therefore, if you are right, you will make a lot of money. If you are wrong, you are not gonna lose that much. So your wins will outweigh your losses. That's how you achieve consistency in this market. And of course, I'm gonna share any possible buy signal. I always share the buy signals on our Telegram channel. So if you are new around here and if you want to have access to premium information, join our Telegram channel, all right? If you want to have access to our strategies, learn how they work and how to trade professionally in the market, the 5% project, which is our educational project, is here for you. Our project aims to help people like you to acquire consistency in this market. All the signals and trading strategies shared over there are meticulously detailed, always offering you explanations for the technical reasons why we buy, why we sell, etc. I don't only share signals, I share education as well. Our aim is to make you a more confident trader and investor through quality information. There is even a free ebook where I teach you my method. Again, it is totally free. You can join us for 7 days for free just to test our service, because our philosophy is to show transparency and deliver value to our members first, and then you decide whether you want to stay with the group or not. Either way, the link to my website is below, is in this video's description down here. All right, there you'll find more information about the project. Then see for yourself if you like it or not. Again, it is absolutely free to try. In addition, guys, back to Nvidia over here. Yes, it is looking very promising. I do personally like it, and I did share a crystal clear strategy on Nvidia on our Telegram channel. And in addition to the 130s support level, now Nvidia is retesting again the 21 weekly moving average, and we are reacting nicely so far. So we see many technical evidence supporting the idea that yes, the 130s is a meaningful support level. If we bounce from here, fantastic. We have a lot of upside. But if we fail in reacting, all right, Nvidia will probably drop. We'll try to seek lower levels, maybe the 115, maybe the $100 again, all right? Either way, always work with a crystal clear strategy. Know where your stop loss and where your target are going to be even before you place the trade, all right? That's how professionals really work in this channel. Now, regarding Tesla over here, we see Tesla reacting nicely, and this reaction is very nice. It's particularly nice because yesterday we saw a bearish candle, okay, right below the 414, a crystal clear resistance level, the previous all-time high from November 2021. All right, so the 414 is still a very important psychological key point, and yesterday we saw such ugly, such bearish candlestick pattern closing below the 414, closing below the 21-day EMA. What's more, this candle structure has a name. It is a dark cloud cover candlestick pattern. Let's take a look at the statistics. The statistics of a dark cloud cover candle pattern. As we can see here, according to Thomas Bukowski's studies in his website, thepatternsight.com, a dark cloud cover in theory is a bearish reversal. Its tested performance is of bearish reversal 60% of the time, meaning out of 10 dark cloud covers, you see 6 will actually reverse the trend. However, they need to be triggered first, meaning we need to see in the following day another candle losing the dark cloud cover's low, preferably closing below it. Then and only then we will see a technical top signal with 60% chances of actually correcting. Since we are completely rejecting yesterday's candle, not losing its low, in fact we are breaking its high, and we are about to close above its high, we are rejecting any possibility of a top signal in Tesla stock right now. In addition, this bullish reaction today occurred right above the 21-day EMA. So we see many interesting bullish signals suggesting that yes, Tesla is supposed to fly and seek higher levels. However, if we lose this candle's low again, if we lose the 414, Tesla will show some weakness, and that this might endanger the bullish thesis over here, okay? So we gotta be very careful. Now, AMD looks very good, all right? Looks very good. Of course, my dear friend, not as good as your like, because if you're still watching this video and you didn't click the like button, my dear friend, you did like the video because you are still watching me. So click the like button and subscribe to this channel if you are not a subscriber yet, because every single day we are here talking about technical analysis, statistical analysis, talking about many stocks, many opportunities we see in this market. We study the market together. I always deliver to you guys unbiased analysis of the market, showing you what it is happening right here, right now. I show the market as it is, without spreading panic, without spreading euphoria. I just describe the movements and we describe strategies to work with, all right? So if you're still watching this video for more than 13 minutes, my dear friend, this channel is for you. Subscribe for more analysis like this. Now, regarding AMD, back to AMD, yes, it is a good reaction, and we are breaking the 117 again. The previous bottom level from December last year, December 20 last year, and this key point was acting as a resistance level short-term wise. As we can see on the 1-hour chart, we can see better on the 1-hour chart, right? See over here, this key point was a bottom signal, right? And then it did work as a resistance level here, and again over here. So another classic example of how the principle of polarity in technical analysis works. Now, by breaking the 117, by leaving the 21-hour EMA behind below the price, AMD is suggesting a bottom signal. What's the problem? The problem is that we are still bearish. We are still below the 21-day EMA on the daily chart. What's more, we saw bullish reactions like this in the past and that they all failed. We are still making lower highs, lower lows. A classic trait of a bear trend, right? Yes, we saw some bounces, some spikes, but in the end, we only see lower highs, lower lows. We do not see any meaningful bullish chart structure yet. Therefore, if you don't have a crystal clear strategy, it is going to be very difficult for you to trade AMD. So you gotta be careful over here. But if you ask me, on the weekly chart, if we actually react from here and a close above the 121 again, that could be another false breakout of the 121 support level, suggesting that AMD has a lot of chances of actually bouncing, probably to retest the 21 weekly moving average again, or maybe the next resistance level at 144. But we gotta close above the 121 on the weekly chart in order to actually materialize a meaningful bottom signal long-term wise. Okay, so these key points are critical for AMD right now. Meanwhile, we see Palantir reacting so nicely. I know today's candle looks quite ugly over here. It is not that impressive, but guys, we are talking about a nearly 4% movement. We are up nearly 4%. We are finally breaking the 68 support level, now resistance level. We are breaking the first meaningful resistance level on Palantir. What's the problem? The problem is that Palantir is still very bearish. We still see lower highs, lower lows. Palantir needs to break the next resistance area made by the 21-day EMA and the $71 again in order to actually make a meaningful breakout of a strong resistance level. And then if we see higher highs, higher lows again, fantastic. Palantir will truly reverse the trend. Otherwise, if we see, by any means, if we see any top signal below this resistance area, Palantir could just continue the pullback on the weekly chart back to the 21 weekly moving average. So it is a critical moment for Palantir. If you ask me, Nathan, what are you going to do right now? Well, right now I don't see any technical reason to buy or to sell, right? I know maybe we could see Palantir going up, but since the risk-reward ratio is not that clear to me, and again, guys, it all comes down to risk-reward ratio, I don't see any meaningful opportunity. If you ask me, Nathan, let's say you have to trade Palantir. You have to do something, either buy or sell. What would you do in this scenario? I would buy, set a stop loss below $63 and a target at the previous resistance level at $80. And this is it. Okay, but it is going to be a quite risky trade, and since I can afford to wait on the sidelines as a retail trader, fantastic. That's totally fine. Guys, there's a moment to go long, there's a moment to go short, and there's a moment to go fishing. That's not my words. This is Jess Livermore, one of the greatest traders that ever lived. He once said these words. Therefore, we gotta be very careful, and that it's okay to wait on the sidelines sometimes, all right? Now, ASML. I know you guys love this company, and if you ask me, since we are near a support, guys, again, we are near support level. If we see any meaningful bullish reaction near the support level, ASML will be a buy again. Of course, it has earnings in 14 days, but still, if we see any meaningful bullish reaction near this key point, it is going to be a buy, a crystal clear buy, all right? So far, there is no meaningful bullish reaction yet. Maybe on January 13 over here, 2 days ago, we saw a bottom signal, but it was too quick, right? Right now we are correcting again. So if you ask me, ASML is giving us a possible another chance of buying it at a good risk-reward ratio near a support level with a good upside for us, because we could easily retest the next resistance level at $780 again. What's more, we see IWM over here going up, and it is exploding today. It is exploding, going up so nicely. We are retesting the 21-day EMA after reacting right above this support level. I did recommend buying IWM on our Telegram channel. The members of the 5% project had access to this. They have access to this crystal clear opportunity over here near the support level. And right now, we are going up so nicely, about to retest the next technical resistance level at $227, which is my personal target. All right, we are not there yet. No, we are almost there, but we are not there yet. So we still should be careful because we are making a bearish candle near the 21-day EMA. But still, this one looks phenomenal. It is looking very good. It is heading towards our target. Why $227, Nathan? Because this key point was a previous resistance area on October and a previous support level on November. And right now, it was a previous resistance level again in January. A few 9 days ago. Therefore, the 227 is a very important resistance level and a technical target for this bullish rally. Therefore, IWM is looking very good. If we see any pullback, all right, any pullback, maybe it is going to give us another meaningful buying opportunity, all right? But so far, we only see some stabilization near the moving average. So far, so good. We are doing very well, and we have Microstrategy, which was on my radar, but I didn't see any crystal clear, meaningful buying opportunity yet. However, if you ask me, Nathan, I can afford holding Microstrategy for many days, right? I can afford holding after earnings. What could be a very nice entry point over here? Well, if you ask me, Microstrategy shows a possible inverted head and shoulders chart pattern. If we break $383 again, fantastic. It is going to trigger this pattern. We have our next technical target will be around $540 up here. So we have a lot of upside potential, but we have more interesting stocks around. Therefore, it is looking good, but since it is going to report earnings in 20 days, it goes against my personal methodology of not holding stocks for swing trading purposes during earnings, all right? Guys, I have a very specific trading method, and I share this method with you guys every single day in our community. Therefore, remember to take a look at our website. The link is in this video's description, and join the 5% project. And remember to join this channel, subscribe, and click the like button, because we are here every single day talking about many stocks together, analyzing many stocks together. You are free to join us. Thank you very much for your audience. See you guys tomorrow. Stay safe. Bye-bye.